Well, good afternoon. You're listening to the new WCEG Network on WCEGTalkRadio.com. Watch us live on your smart TV, YouTube, WCEG Network. I'm Celeste Giordano, your show host of the Global Legacy and Wealth Building for the next hour. And my amazing guest today is Sara Poe with Poe's Accounting Services. And we're the worldwide community empowerment group where we speak life into the community. Like us on Facebook, follow us on Twitter and on Instagram at WCEG_talk_radio and at WCEG Network. We're also on Roku, we're on Apple, and many other of those platforms that we have there. And our disclaimer, which is last but not least, is the topics and opinions are those of the show host and guest and not WCEG Network. Thank you for your continued support. And thank you, Penny Rogers and our WCEG Network for this opportunity and this platform to bring amazing guests like Sara Poe with Poe's Accounting Services to our family, so we can learn a lot of things about what we need to do this year before the year is out, and that's just a few weeks away. And I'm excited to have Sara Poe as our guest. I also want to say that this is also a show for nonprofit and for-profit, and Women in Community Impact is honored and privileged to also be a part of hosting this show. So thank you so much, Penny and WCEG Network. And Miss Sara, how are you?
I'm doing great. It's a beautiful day outside.
Absolutely. It's always a great day. And I especially love the fact that my husband and I are both here in Atlanta, Georgia. We don't get to be here together that often. And so it's been a blessing for the last couple of weeks to be here, and a little bit warmer here than it is in Tennessee and Kentucky.
I think it's supposed to get cooler tomorrow.
Absolutely. But
this time of year is too hard to dress, you know?
I know you dress one way in the morning, and in the afternoon you're peeling those layers of clothes off. And my husband just said we've had the heat on very low, and I just put the air conditioner on. He says, "You're freezing me out. I'm going to the bedroom and put the electric blanket on." But anyways, it is a great day, and we are just really, the Women in Community Impact and myself and WCEG Network, just really honored to host you. Well, I love hosting you every year in the fourth quarter because, you share wise words of wisdom of how to finish strong in the fourth quarter and the things that we need to do before we roll into 2025. So many people make the mistake of just rolling into 2025 without having those important phone calls and seeking advice and counsel, that they think, oh, I'll just do it next year. So for our audience and listeners here today, any questions you have, put it in the chat right there. Sara and I'd be glad to answer any questions we can for you. And I'm sure that we can get an answer for you. And so let's get started right here, Sara. I would love for you to tell our audience and listeners a little bit about yourself and how they can get a hold of you, please.
Well, thank you, Celeste. I appreciate that. Hi, I'm Sara Poe with Poe's Accounting Services. We have an office in Decatur, Georgia. My email to reach me is spoe@poecpas.com. Our office number is 770-545-8841. We're on Facebook, we're on Twitter, we're on LinkedIn. We also have a weekly tax blog that we put out. I think you get some really good information with that. But if you would like to be added to our list so it goes to your email, you can email us at info@poecpas.com, and we can add you to that list. It is on Twitter and Facebook and LinkedIn. If you're interested, just go look at some of them. But I do think it gives a lot of good information for those.
Absolutely, Sara. And I love reading those. I love subscribing to your weekly newsletters. They're very beneficial, very educational, inspirational, and they're jam-packed with a lot of pertinent information that can help an individual, help a business, a corporation, an entrepreneur. It can help an elderly couple. I mean, you just have a wide variety of things that you share. Also, Women in Community Impact as well. We share your blog as well as I share my blog with CelesteGiordano.com, which is a weekly blog that comes out every Thursday. But you can find Women of Community Impact. You can go to the womenofcommunityimpact.com. And we also have a group in LinkedIn as well as Facebook where we share these blogs. We share your blog in those groups as well as blogs that I do and other pertinent blogs to help people grow their business or help them grow their personal life. So thank you very much for sharing that, Sara.
Well, thank you.
Well,
and also, there's some great podcasts out there. And if you're looking for a certain type of podcast, just email me, ask me, because I listen to about 10 a week because I'm looking to hear the ones that are better, and you're constantly changing. And, but there's also good information out there in podcast if you're interested in that.
absolutely. And, and what a great opportunity with WCEG Network that this is on YouTube, it's on Roku. And this show, you can go to the YouTube channel, WCEG Network. You can go to Celeste Giordano at YouTube because I put those on weekly. Every time that we do a show with WCEG, you can go on Roku and you can watch us on Roku TV. So WCEG Network is another great opportunity to catch this show at a later date as well and to go back and look at it. And I'm encouraging you to go back before the end of the year and review this show tonight because it's going to be jam-packed with a lot of important information that you don't want to miss before the year end.
Absolutely. Yeah, like I know I gave you a list of questions, but I kept thinking, oh, I could do this, I could do that, but I thought you can only do so much.
Absolutely. I mean, we could really host another show if absolutely, Sara. So we're going to get started right here because there's a lot of stuff. And this first question to me is one of the most important questions because I'm not sure everyone is aware about the beneficial ownership information, or as you and I know it as the BOI. And why is this so important?
Well, this year's the inaugural year of the beneficial ownership information. And you go to the FinCEN website, fincen.org. And basically what you're trying to do is let them know who owns the business, who are the beneficial owners, who are the people they need to know that are participating in this business. Why are we having to do this? The biggest thing is fraud and money laundering. Okay. Does your company have to do this? Well, my small accounting firm, yes, we do, because we don't report to the SEC or Sarbanes-Oxley. So if you've got a company and you're reporting to the SEC, this is not something you have to do. Okay. If you have a smaller company, an LLC, S Corp, some other, partnerships, yes, you have to report to the FinCEN this information. It's not real hard. We do this service for people if that's what they wish, but it's not really that hard. The hardest thing is getting your driver's license on the website. You know how, because you have to prove who you are, okay? So what you do is you have to prove who you are and you get a FinCEN identification code or number. So you never use your Social Security and you never have to redo your driver's license. Now you're identified by this number, right? So anything you do in that website, you use that number. I could be a beneficial owner in 5 different companies, but the ID number would be the same for all 5. So if I ever have to update my information, I just go into the beneficial owner info and update my info, and then it updates all the companies I'm involved in. So those are some of the things to think about. It's a great, I understand why they're doing it. They're just trying to stop people from laundering money is the biggest thing.
Well, Sarah, let me ask you something. So, it doesn't matter if you're a solo entrepreneur or you do 1099s or LLC or corporation, you have to register with the BOI, right?
Not nonprofits, I'm sorry.
All right, that was my next question. Do
Yes,
nonprofits.
not nonprofits. That could possibly change in the future, but just like an HOA has to do it, but every board member has to be reported. So if you've got a nonprofit, you could have 12 people on a board and you would have to report every single one of those. So they haven't really gotten down to that level of detail. An HOA typically has 4 people, right?
Right, right.
My LLC is a single member LLC. Yes, I report. Partnerships report. S corps report. The best way to think about it is if you're a nonprofit, this year you're not having to worry about it. Or if you report to the SEC or you have Sarbanes-Oxley, like some big private accounting firms have Sarbanes-Oxley things they have to do. They're not having to report into FinCEN because of that. They're being reported a different way. Okay. Then there
Okay.
will be a database out there for certain government agencies to understand who owns what and if they need to find that person, how they can find them.
Well, let me ask you something, Sarah. So what if you have a trust and you buy property and this, that through a trust? Do you have to do?
Not this year. Not this year. Trust are on the horizon to be added to that. I think this year they were trying to do it as simple as possible without getting too out there. We just had a bunch of our FAQs come back in September, which that's frequently asked questions. And that's 50 some pages now. So I just took another class on it today because it's changing rapidly because they finally answered a lot of the questions.
All right. Do you have the link for our audience and our listeners of where they need to go for this?
Yeah, yeah. I didn't even think about that, but yes, I could take care of that.
All righty. And hopefully Penny will be able to get that out in the chat to our listeners and our audience, because we definitely want to drive our customers there. And you may think that you don't need to do it, but what you need to do is you need to go to this link, this website, and you need to read, because I'm sure it will tell you who the candidates are. Is that correct, Sarah?
Yes, and something else I was just thinking about. I love when my train of thought goes 10 different miles away. But with this, it's just better to do it now because if this year they're not going to really punish people because it was a brand new thing, right? This year, if you started a new company, you had 90 days. Next year, it'll only be 30 days. But everybody who has a company who has to report under this has to report by the end of this year. There will probably be some grace in that, but after that grace goes away, the penalty will be $541 a day.
A day.
A day. If you willfully say, I'm just not doing this, right? You're going to be fined that $541.
All right. So let's say you own a landscaping business.
Okay.
You have to set yourself up with this, right?
Absolutely. Yes.
All right. If you are a painting contractor or a building contractor, you have to go in there and register.
That's
It's
right.
not, so if you are not a corporation, if you are not an LLC, which you still have to do if you're just an entrepreneur, you still have to do it.
That's right. That's right.
So I want to make that clear.
Yeah, it's not to punish anybody. It's just to find the bad people when we need to and make them pay and not the everyday American pay.
Absolutely, Sarah. Well, let's move on. What about the August rule and how can my small business use it?
Oh, okay. So I can't spell real good. That should be Augusta rule.
Okay.
But so an Augusta rule was actually started because of the golf tournament in Augusta. Those people that live on the golf course would rent out their home, right? Well,
Yeah, I have friends that do that.
yeah, you can make a lot of money renting out your home during that tournament, right?
Oh, most definitely.
So this rule came about because of that. So basically what it is you can rent your home out for 14 days, up to 14 days, and not be taxed on that income you earn. Okay. So I've got this beautiful home on the golf course. Well, you know, y'all have fun. This is how much it's going to cost you. And I don't have a limit of how much I can charge the person who's renting the house, right?
Right.
So you got to just make it worth their while. So then they give you an invoice. Yeah, you give them an invoice. This is how much you owe me. This is what I provided for you while you were here. You may not provide anything, or you may provide food, who knows? But all that could be included in that. And you, as a homeowner, are 14 days of not making income on that house. And most people aren't gonna rent it out for more than 14 days. That 15th day, you would have to include that. So you want to keep it under the 14, right? Another
No,
thing, go ahead.
no, no, go ahead.
So another thing a small business can do is like, here I've got a nice home. I have business meetings with my employees 4 times a year. We get together, we discuss things. Okay, this is a season that's getting ready to come up. I can rent my house out to my company for 14 days. And then my company pays me for the use of my house and whatever else I provided. But it's got to be legit. You can't just say, here's a bill for $100,000, right? That's not legit, right? It's got to
Right.
stand the test of time. You got to have signatures. You got to have approval. But it's just a way to make a little bit of money on the side and not have to pay some income tax on it. Is that what we're trying to do, is not pay as much income tax?
Absolutely. You know, I have three friends that live in Augusta, and they rent their houses out every year during the Augusta National right there. And they have companies that do contracts with them. Every year they're just
Yeah.
repeat, come around, and they have the corporations and the companies that are renting these houses and of things of this nature. So what if you had a house and it was an Airbnb? Would that
It's
qualify?
a little bit different because then you're treating that as a business, right?
Right.
If you lived in that Airbnb and you rented it out 14 days a year, that you could do.
Okay.
But because that is a business, that's a totally different thing.
I agree. That was a question one of our listeners asked is, you know, is there a difference than is it different than an Airbnb? And most definitely, because an Airbnb is a business, it's a separate business. We're talking about your own personal
Your personal
house
residence,
where
yes.
you live, and that's what our friends do. They go on vacation for 2 weeks, and I
Yeah,
mean, then they have bukus of money left over after their vacation, you know, where they've rented this house,
that's right.
their house out. So very good. Um, Home office deductions. What benefit to us? You know, what is the benefit and for the deduction to a small business owner?
Okay, so I have a small business, but I have an office in Decula. Well, now I am 30 minutes away from that office, so I'm working from home a little bit more, right?
Right,
Yes, even though I'm a W-2 employee, because I'm the owner, and when I come home, I've still got work that has to be done, right? I
right,
may see people all day, but then the paperwork's not getting done. So I come home so that when I get up from this computer and quit working, I can go to my lazy chair in the other room. I'm not having to get in a car, drive, worry about nighttime rain, those different things. So as a small business owner, I can take that home office deduction. Not a W-2 employee cannot do that, but a small business owner. Let's just say a dentist. He has to have the office to do his dental work.
right,
But he don't want to stay there after 5:30 at night because he wants to go home, have dinner with his family, have a little bit of family time, and then sit down at his desk and get the paperwork done, right? We all
right.
do paperwork. And we know they have little babies if you don't take care of them because they just grow and multiply.
Yeah.
So that's where a small business owner gets a little bit of a benefit for that. There's two ways to do a home office deduction: by square footage on actual expenses, or you just take the square footage and do the simplified method, which your biggest office deduction that way is $1,500. With actual expenses, it could be more. But anytime anybody comes into me for the first time and we have an home office deduction, we look at both, right? Then the next year we say, are things about the same? Then we keep it the same way. But let's say the third year you come in and you had a water leak, right? So now you got to replace all your floors. Your actuals are going to be a lot higher if you decide to go that way than the standard, because you get the 100% of what happened to the floor in your office, right? You don't get 100% of what happened in the kitchen, but you get at least 100% of what happened in the office, and you get a percentage of the rest of the house, right? So
Right.
those are things to think about when you're doing these home office deductions and why it's beneficial to a small business owner.
Absolutely. And so what advice do you have to somebody that maybe is using the home office deduction? And some people do their own taxes, and shame on you for doing that. Um, what advice do you have for them when they are taking an office deduction to be aware of?
So first off, make sure you got the right square footage of the office and the square footage of the house. Make sure that you have details of what expenses you have paid. The way I did it in the beginning is I paid everything online, had everything categorized. End of the year, I could run a report. So this is how much you spent on utilities, pest control, mortgage, interest. Then I had all that information and I didn't have to go gather it, right? There's more ways to be able to do that these days than used to. So then I would look at what is the actuals? Okay. So in actual, if let's just say you can't do a Schedule A anymore, so now you could take the home interest mortgage on your home office because you're doing the standard deduction, right? So you're not using that on your Schedule A. So you can use it on your Schedule C for that deduction.
Absolutely. Go ahead.
So there's, like just say your floors have got to replace, round numbers, it's going to cost $10,000. 1,000 of it is in your office. The rest 9,000, you get a percentage of that, right?
Right.
So you need to know the difference between direct and indirect when you're doing these forms. Direct
Absolutely.
is something that affects just that office. Let's just say I decided to paint just my office because I'm sick of this color. That's 100% deductible. But if I paint the whole house, the other is on a percentage.
Right.
Home care is a percentage. Pest control is percentage.
Percentage.
Security is a percentage. Anything that touches that house is a percentage.
Percentage. Okay. And where do our listeners figure out the percentage?
So what you do is when you put in the square footage of your office and the square footage of your house, it gives you that percentage. It
Okay.
calculates that for you.
Okay. Very good. Fair enough, Sarah. Main thing is, if you're an entrepreneur or you're a business person and you're using your home and you're using a home office, you definitely need to make sure that you're getting the proper deductions on your tax return. And if anybody has any questions, Sarah, how can they call your office? What's your office number?
The office number is 770-545-8841.
Very good. Thank you. So here's another new thing. How is AI affecting tax returns at the IRS?
Well, that's a really good question. So now that they've got AI in place, it just combs through the data so much quicker, right? As an S corp or owner, you are supposed to have payroll because you no longer have self-employment taxes. You need to have payroll taxes so you're paying into Social Security and Medicare and unemployment, right? Well, even 3 years ago during the pandemic, they didn't have the bandwidth to check every S Corp return that it had payroll for the owner. Okay. With AI, they can look at thousands of tax returns in a matter of minutes to make sure there's now payroll attached. And guess what's going to happen? You're going to get a letter. You don't have payroll. You're going to be fined.
Fined or audited too.
That's right. And more of the audits now are coming from AI.
Yes.
The audits are not like they used to be. It's not the whole tax return. They'll pick something on a Schedule C, and if something that one thing they pick comes out bad, then they'll audit the whole Schedule C, right? A Schedule E, which is rental properties. Let's just say they find something wrong with your investments, right? So they start with one little thing, and if there's a problem with that, then they branch out on those audits. Most audits are all done by paper now. After COVID, you don't want to go see them anymore, and they want to come see you, right? Who wants that agent at your door? Nobody, right? It's easier to do it this way. You can do it by phone, and when you answer all these questions, you can do it by fax. You can do it you can Federal Express these answers in. But that's just two things right there that AI is doing, because it's got the bandwidth to do it. We as humans don't have that bandwidth.
Right. Okay, well, that's interesting. So when preparing taxes for 2024, how does the TCJA tax cuts will affect your tax return in 2025?
Okay. Well, our newly elected president is the one who originally put the TCJA Act in. Okay. And that was it went into effect in 18, and it was only good through 2025, right?
Right.
So they will look at those, and they will probably make some of them permanent, and some of them they probably won't. There's controversy on a few of them. And a lot of them, there's no controversy, right? One of the biggest changes that I saw was that the standard deduction was much higher than itemized. So many people these days do no longer itemize, unless you got a lot of charitable donations or you had a health issue that year. Typically, it's a lot harder to meet that threshold with that as opposed to standard. Like a standard this year, I think, is 24/7 for a family or a married couple, where a single is only half that. A lot of times, unless you got a lot of mortgage interest, it's hard to meet those things. I have a few people who do a lot in charitable giving, and they can meet it that way. But it's just a much harder thing to approach and get done. But some of the things that will change, or if everything reverts back and they keep nothing, all right? So in 2023, the tax rates were 10, 12, 22, 24, 32, 35, and 37, okay? Tax rate after the sunset of TCJA will be 10 and 10, 12 to 15, 22 to 25, 24 to 28, 32 to 33, 35 to 35, and 37 will go to 39.6. So those are just smaller. I mean, your tax rate will go up by that amount if nothing changes and they just all sunset. Your child tax credit will go down to $1,000. Right now it's $2,000 and $500 for a kid in college. If that sunsets, you go back to 1,000 up to 17 and nothing for anything over that, right? Those are just two of the things right there that will happen. Rates, I talked about that. Your personal exemptions are zero right now because of standard deduction. If the personal exemptions come back, that's $5,300. That's not a lot when you're used to $29,200, right? That's a big difference, right? I talked about the child tax credit. AMD, the thresholds will go down. Right now with AMD, the thresholds are higher. So your phase outs are higher. So the phase outs will go lower and you'll miss out some of those deductions that you've been used to taking. So what I'm trying to explain to people is when you're in there getting your 2024 done, say, okay, how are these deductions going to change for me in 2025 so that you're aware of that so you can plan for that.
Plan for it. Absolutely. And you just hit the nail on the head, Sarah. You know how I am about planning. Here we are on to November, what,
Well,
12th right now. We literally have about 6 weeks till Christmas and then another week. So 7 weeks to the end of the year. You need to be scheduling your meetings with your CPA, bookkeeper, accountant right now. Some things have maybe changed. Maybe you inherited something. Maybe, you've had a great loss. I don't know. But you need to have those face-to-face conversations with the CPA, bookkeeper, accountant. You need to have those meetings with your financial advisor. We just had Kim Schooler on here, 3 weeks ago. You need to know what do you need to do between now and the end of the year so you can maximize, for your taxes as well as to plan moving into 2025 because maybe, maybe you have an inheritance coming in. Maybe you won't get it between now and end of the year, but you're going to have it next year. What do you need to do to plan for this? So there's so many things. But you need to have those conversations with your CPA, bookkeeper, accountant, your financial advisor. Go in there and have a conversation with your banker. So many people, we're in such a digital era that they don't even know who their banker is. They don't even have a name. They don't have a face-to-face relationship with your banker. We used to go to the bank and make deposits and do this, and everything is just so digital. You need to know somebody. You may need to go in there and want to borrow something, or you may want to buy a car, or anything. You just need to have a relationship with that person. If you're a business entrepreneur, corporation, LLC, I don't care. If you don't have a business coach, you definitely need one. But you also need, if you do have a business coach, you need to be planning your 2025 now. I mean, you need to have your game plan in place before January 1st, 2025. You're already 90 days behind if you wait to that day right there. So, this planning is so important. And, we have holidays coming up. So you need to pick that phone up and have these conversations with these proper people.
Yes. And that goes into the next thing I wanted to talk about was you need to have that year end, well, no, it wasn't really that one, but absolutely, because if you come to me in 2025, I can't do any tax planning for the previous year then. It's too late. It's done. All right. So let's just say you're going to get $100,000 in a bonus by the end of the year. You need to be in there right now.
Yes.
So we can talk about it and plan for it, right?
Yes.
But you need to get on that calendar. I'm telling as many people as possible, go ahead and make your appointment for next year because last year we got busy. People couldn't get in. And they were some of the older clients, and we kept telling them, you need to make your appointment now. If you know that you're getting a K1, make an appointment for the second week of March or the third week of March, because typically they're coming out then, right? But though you need to get in sooner than later because one, there's not as many of us anymore. I will say that the pandemic did a number on our tax professionals. So you need to plan for that. It's not as easy as just picking up a phone call and getting in.
Absolutely, Sarah. And the other one that I failed to mention, and it's one of our questions here, is you need to have a face-to-face meeting with your insurance person, whether it be for your homeowner's policy, your business policy. I mean, you should be doing some evaluations with that and sending these forms in, especially if it's a nonprofit or a business. You have to send those things in. And a lot of times you need to have some figures from your CPA, bookkeeper, or accountant right there. But some things maybe have changed. And one thing I just not to add on this, but we had a little situation here at our house that we had to call our State Farm insurance agent, and you can't even call an agent and make a claim. You got to call somebody else to make a claim. I mean, I was like, oh, well. So my agent, I said, I'm coming to see you tomorrow. We're going to have a conversation, you know? So any old ways. So what is it with, when was the last time you revalued all your insurance needs? What are your comments on that?
That's huge. And I'm in the process of doing all that now, right? I need to do it this time of year because I've got more time this time of year. You need to look at the time of year where you can spend the time researching, evaluating, comparing policies. No policy will ever be apple to apple, but you need to be prepared for that. I use AI somewhat in my business. I'm not real big into it, but because of that, I've got to go in there and let my insurance carrier know. I have a plan that I have to provide the IRS with for if I get hacked, what's happening. And if I use AI in anything in my business, it has to be in that plan, how I use it, why I use it. But all those things, I have to have errors and omission insurance every year.
Yeah, yes.
Insurance is one of the biggest things that have inflated in the past 4 years.
And they've skyrocketed.
It's skyrocket. I mean, you need to be on top of that. So this year, that was my biggest goal, was to go through all my insurance projects and make sure that I'm paying. I don't want the lowest, I don't want the highest, but a person who's providing me with the service I need, right? And the insurance I need. Like cyber insurance has gone up every year for me. You know, there's probably more carriers out there than there were 5 years ago. So that's another area that you need to look at. Because if you own a business, you need cyber insurance.
Oh, absolutely. And you know, the thing with the insurance as well is that you're processing credit cards and
Right.
things of this nature. I mean, this insurance is a huge thing that you need to be reevaluating between now and the end of the year to make sure you have the proper coverage. A lot of times, maybe you have a company, you have a vehicle, your personal vehicle, but you're using it in your business. And if you're traveling or you're taking people with you, guess what? You better have some business insurance with that car, because you know,
Absolutely.
if you have an accident and you've got a client with you and you're going somewhere doing something, you know, they may not pay that claim out because you were using it for business and your car was only registered for personal insurance. And I see so many people make that mistake, and so many people, like business entrepreneurs, even LLCs, that they don't have that business insurance. They think it'll never happen to me, or I just don't want, you know, they shuffle it under the rug. Shame on you. You don't do that.
Absolutely. So, and I was talking to a friend over the weekend. He's a musician, and he was talking about all of his guitars in the house. And I said, "Well, I hope you've got an insurance rider on that." And he said, "Why would I do that?" I said, "Because that house burns down, you can never replace all those guitars. You need to go there and take video of every single one of them. What is it worth? And get you an insurance rider on that, because in your worst moment, you don't need to have to be worrying about that too."
Well, not only that, Sarah, you know, is whether it's your house burns down, you know, we have, you know, crime has been on the rise. People, you know, home invasions and coming in and taking your stuff. I mean, and, you know, just like, you know, if you don't have a safe in your home, I hope you have a safety deposit box, that you have your wills, you have your tax, last, how many years you need, 7 years, 10 years, whatever it is. You have all that in a very safe place,
And
because
a lot,
anything that happened to your house, I mean, if somebody broke in, they could steal your identity just off of your tax returns and all the stuff, you know, things that you have there. And we have to live in an era now that we have to protect that.
yeah, just because you're inside of your house and it's locked up doesn't mean it's protected.
No, not at all.
No.
Not at all. So Sarah, let's do a little nonprofit work here.
Okay.
We talk about year-end board meetings. What else? Talk about that, and what else do nonprofits need to be doing between now and the end of the year?
Well, like Celeste was saying earlier, they need to be planning for next year. What do you want? What is your goals going to be for next year? Who are you going to help? What do you know? You need to have those conversations with your board, right?
Right.
You need to have somebody writing all that stuff down. And even a nonprofit needs to evaluate their insurance needs, right? Because you
Absolutely.
should have board insurance. If you do events, you should have insurance for that. But you need to look at next year to see if there's anything new that you have never had to have insurance for and need to plan for that, right?
Absolutely. And I want you to expand a little bit, event insurance. So you're a nonprofit and you're doing a 5K run, or you're doing you're serving food at a shelter or something like that. That's one type of insurance. That's your business insurance, right?
Correct. Yes.
Now, as a nonprofit, you have a board and you have high level, hopefully you have some high level executives as well as high level people that, they're homeowners and maybe they're retired. I mean, they've accumulated some wealth. You need to have insurance on your board members as well. Is that not true?
That's absolutely true. And why is that? Because the board's the one that makes the decisions. What happens if we make a faulty decision to do something and it causes us some heartache? You don't want your board to be sued for that and not have insurance. I mean,
Absolutely.
it's just a scary thing to have happen.
Absolutely. And what else for nonprofits would you recommend, like for taxes or forms or anything, Sarah, that let's just put it under the umbrella here for nonprofits. What else do we need to share with our listeners and audience on WCEG Talk Radio for the nonprofit industry?
Okay, so nonprofits, they have volunteers, right?
Right.
Every time you have a meeting or an event or anything, your volunteers should sign in. Because you need to know, the IRS wants to know how many hours how many hours are your volunteers providing for you? Typically that's at no cost, right?
Right.
So the IRS, and when you file your tax form, if you do a 990, you need to provide that information. They may want to know who's your number one volunteer or how many hours. They may not want to know the names, but the hours and things like that. It's so important. If you need to get grants, you need to know that information. You need to
Yes.
have the documentation for that, because a grant wants to know you got the backbone behind you to help you with the money you're getting ready to get, right?
Absolutely. Absolutely. You need to document those hours, the number of volunteers. And the other thing is that you need to, when you're going off site, you're going to a homeless shelter or you're going to do something with foster children, you need to have disclaimers where people sign disclaimers where they won't come back and sue the nonprofit if something happened to them.
Absolutely. Because unfortunately, anywhere you can go, some bad can happen, right? And that's just an unfortunate part of the world these days. But we have to protect ourselves from that. Now, you may also have your volunteers. So say if you go into a foster home or a foster house, right? You may have to sign something as a volunteer saying you will not take any pictures, you will not disclose any information about this place, because it may need to stay secretive, right? We don't always know the reasons behind that, but we need to be prepared for that as a volunteer, that you may have to do that. If you're not comfortable doing that, don't volunteer at that event, right?
Right. The other thing is, there's you also, as a nonprofit, is you need to have your volunteers sign that they are releasing, if you use pictures and you're putting it on your website or you're using it for social media, you need to have a release form that allows that nonprofit to use your picture
Absolutely.
on that.
Yes.
There
And
was one.
you
Go
need
ahead.
your board to have a meeting every year, because that is the IRS wants to know, did you have a board meeting? Are any of your board members paid? Or anybody being paid? Are they affiliated with a nonprofit through a family member? How are those third party tie-ins going? Because the IRS wants to know of every family relationship that's being paid and why it's being paid. Because a nonprofit's there to help people, not to make money and keep it.
Exactly.
So you need to be
Exactly.
able to explain all of that.
And you just need to do your due diligence, because a lot of times, people have burning desires and passions. They start a nonprofit and they think I'm really small and tiny and I don't need the insurance right now. I can't afford the insurance, yada, 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 yada. Let me tell you, the first thing you do is get your insurance. You have to have that insurance right there because you just never know when something's going to happen, and eventually it will. And you don't want to need that insurance when you don't have it. You want to have it when you need it.
There's a lot of us control freaks out there where we try to control every aspect of our lives and everything that happens, but you can't.
You
In
can't.
reality, you just can't.
Absolutely. And you need to do background checks,
Yes.
on your
Yes.
people, especially a lot of the companies, if you're going to shelters and things of this nature, they'll require you to do a background check. And it's just good to do a background check on yourself. So, you have it, especially if you're looking to get involved in volunteering with multiple nonprofits, you can have a background check done right there.
Absolutely. And I do background checks on any employee I hire because what if they need to help me with something with the nonprofit that I'm part of, right? Women of Community Impact. That background check's already been done, right? I'm not having to worry about that extra step because it's something I've already done for them. But you need your year-end board meeting minutes, right? One for the Secretary of State, for your tax return, but those are things that are so important to have.
Absolutely. I think we covered nonprofits really well. That's a simple one for us.
Yes. Yeah.
So I know we talked about this, but is there anything that you want to add? Have you had your year-end tax meeting with your professional tax professional?
That we talked about it a little bit, but if you know you've got a big thing, let's just say I knew I was getting $1 million. I'd be in there today talking to you, making sure I did everything I could possibly do to pay the least amount in taxes. Maybe that means I need to start a foundation, right? To put that money into a foundation. There's so many different things. Maybe I need to invest in gas and oil. It's a little bit more risky, but the benefit is better. Have those conversations. Maybe you have your tax professional and your financial person together with that conversation because they come at it from two different perspectives.
Exactly. They're not going to give you the same advice. It's going to be two different perspectives of how they're going to do that.
Right. Where a financial planner is looking to how much money can we make off of this to help you out in the long run, where I'm looking at it from what's the thing we could do that's going to give you the least amount of taxes?
Taxes. Exactly.
Right. And it's a combination of two. You may have to go, you have to decide what's the best plan for you because not everybody's the same. So if you don't have those meetings, don't get mad at those people when it comes around to the next year and you're paying $50,000 extra because you didn't do those meetings.
Well, and here's the other thing, Sarah. You may have a CPA, a bookkeeper, accountant. You may have a tax attorney. You may have a financial advisor. And guess what? Not all of them are going to be proactive and come to you. No. They're going to wait for you to come to them. So you have to be very proactive in protecting yourself and your assets.
Absolutely. How do you think the rich get richer? Through assets.
Yes.
Asset protection. That's how they do it, right?
Absolutely.
So that's just some things to think about. And if you don't have those meetings, you never know that.
You'll never know. And and it end up costing you in the long run because you're going to get into 2025 and say, darn, I should have done this, or I should have done that, or I should have had that meeting. Absolutely. Okay, go back and listen to WCEG Talk Radio with Sara and Celeste, and you've got your answers of what you need to do. So we got just about a few minutes left, Sara. Have you put money into your retirement this year?
So I've got two different pages here on that. For an individual, right? They can do 401k plans, they can do IRAs, and they can do simple IRAs. For an individual, right? If you do a 401k plan, you do 23,000, or with a catch-up plan of additional 7,500 more dollars. You can do traditional IRAs with an additional $1,000, over 50. You can do simple IRAs. That contribution limit can be 17,000 with additional 3,500 of over 50. That's a lot of money right there. You could be putting away to help take care of your years later. That's just individuals. In a business, you can do a SEP IRA. You can do up to a limit of $66,000 on a SEP IRA. A simple IRA, you can do up to $19,000. A solo 401k, you can do up to $66,000. That's a lot of money you're leaving on the table to not pay taxes, right?
Exactly.
It's just well worth that to think about all those different things. And again, that's where you need a financial planner. I know this much about it all. Your financial planner knows this much, right? You need a person who can help you install these plans, can help you take the money out on a quarterly basis, monthly basis, so that when it's time for your Social Security, you've got ways to supplement that and you're not having to worry about living off your Social Security. But you really need to be looking at this, and the sooner the better. My 21-year-old grandkids, guess what they're doing? One thing I require once they turn 21, they need some type of retirement plan. I don't care what it is, but I need them to start now because I'm going to be dead and gone and I can't be worried about it. Now,
Absolutely.
they don't always like me when I put these little things in for them to do, but they'll be thankful years down the road.
Absolutely. I mean, if people start young, they become multi-millionaires
Absolutely.
a lot quicker and faster. The other thing, talking about getting together with your CPA, bookkeeper, accountant, your financial advisor, insurance person. If you're married, you need to do these things together. Your financial advisor needs to know both of you. Your accountant needs to know both of you. So many times we put the trust into the husband or to the wife or whatever, but it's both of you. Don't get caught not having a relationship, both of you, with these people.
Oh, because I can tell you the number of people that either the husband or wife comes to me and the other one just shows up to sign, right? The tax return. So they didn't really learn anything. Then God forbid the one that comes to the meeting all the time dies. So now you've got a spouse who has no clue what's going on, right?
Right.
Some people will take advantage of that. Not all people, but some people will.
Some of them may not
That's
even be able to access their stuff.
right. Absolutely.
So this is so important, and we covered this with Kim Schooler 3 weeks ago about financial abuse, and that is so important. So if you're listening and you missed the show last week, again, you go to YouTube, Roku, WCEG Talk Radio. You can go to Celeste Giordano on YouTube, and you catch the show with Kim Schooler on financial advice as a financial planner about financial abuse, as well as what we're doing here today, Sara. But you definitely need to have that relationship, not one of you, but both of you.
Absolutely.
Okay.
Because it's heartbreaking when those people come in and they have no clue. And we're just trying to piece everything together. Everything takes 3 times as long.
Absolutely. And there's so many things that we could go on and talk later about this, but like utility bills, this or that, you should have those in both names, not just one name.
Absolutely.
Your deeds to your house should be in both names, not just one. Maybe you bought a house and then you married and it was in the husband's name and it wasn't in your name. You need to have the deeds in both names. So, again, that's a whole new show, a whole new topic.
Yes.
My last question for you, Sara, is what is the benefit of a HSA?
So an HSA is a high deductible medical plan. You can have an HSA. So what that does is you can have a certain amount of money come out of your paycheck every week, or after you get paid once a month, twice a month, every week. You have that money go into your HSA, right? That money, you do not lose that money at the end of the year. It just keeps rolling over, and you can put it in. You can put it in accounts where they can invest that money, because what I tell most of my 40-year-olds, start your SHA. So when you're 70, you've got all that money saved. because it's put in there for medical reasons. If you use that money for medical reasons, when you take it out, it is not taxable.
Right.
So now let's just say you're in your 50s and you have a heart attack, you've got a little bit of a nest egg there. You're not having to go into your retirement and things like that to pay those bills, right? So an HSA never dies until you die.
So can you use that money for caregiving?
For medical reasons, yes. If you got a reason that that's why it needs to happen, yes.
Okay. Very good.
I tell more people to do an HSA more than doing, you know, nursing home care, right? Because
Right.
what happens if you're 70 and you refuse, you're not going to let them put you in there. So you've had this policy for 30 years that you're never going to
You're
use.
never going to use it's, and you paid for it.
That's right. So you're better off to put your money in an HSA where you can use it later. And it just keeps rolling over. As long as you use it for medical reasons, it's not taxable. And when I'm 70, I'd love to have $20,000 in account. Anytime I have to go to the doctor or pay a bill or get medications, I've got the money already there. I'm not worried about it.
Absolutely. And that's great advice, Sarah. So we have just a few minutes left, Sarah. How can our listeners, why don't you tell them how they can get a hold of you again, send them to your website, phone number, as well as any email information, please.
Okay. So my office number is 770-545-8841. My website is www.poecpas.com. The email is SPOE, SPOE at poecpas.com. Those are the main ways you can get to me, or just call Celeste, she'll let you know. No.
Absolutely. And I just want to remind our clients and our customers here today that, in order to finish strong, you have to have a fourth quarter mentality. We're in football season, and Sarah, I know you love football just as much as I do. And to have a fourth quarter mentality, means that you're on point, just like this. And when you have the 2-minute warning, you're giving it your all. Well, guess what? This is the 2-minute warning for getting in touch with your CPA, accountant, bookkeeper, insurance advisor, financial advisor. This is your 2-minute warning. The other thing is you have to celebrate your wins throughout the year. You can't wait to the end of the year and look back and you think, well, I really didn't accomplish much. But when you start writing it out or having that conversation with these important people, it's like, man, I really accomplished a lot this year. So it's important to celebrate your wins, review your best business operating strategies. I'm Celeste Giordano at celestegiordano.com. Sarah Poe with Poe's Accounting Services. Women of Community Impact is our nonprofit, and this is our nonprofit and for-profit show. And of course, WCEG Network, Penny Rogers, Our Heart Loves Your Heart. Thank you for this opportunity to serve the community. And we wish each and every one of you a wonderful and blessed Thanksgiving and a Merry Christmas.
Yes.